Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is April the 18th, 2023. It is now 4:21 p.m. Central Time. The bond market and the mortgage-backed security markets are closed for the day. We're going to take a look and see where home loan interest rates are ending. Now, if you watch this show each day, which you should, you may have noticed that I did not put a report out yesterday. The mortgage-backed security closed yesterday down 44 basis points in the red. Not a good day for home loan interest rates, but it's kind of ironic because I could not get the Brent Bruce Daily report out because I was so busy with incoming home loan applications and contracts of people that are getting under contract to buy houses because the summer selling season is here. And it's interesting because home loan interest rates are only about a half to three quarters of a percent less than they were at the peak when everyone was saying there's no way I would buy a home at that interest rate. Well, they've come down a little, and we do expect them to come down quite a bit more here through the summertime, hopefully in the second quarter to be able to meet my projections, but they are going to come down. And if they do come down, what does that mean? That means that two times, three times, four times more people are going to be at those open houses. And we know inventory is short. So I am seeing people start to get aggressive with rates where they are. So let's take a look and see where home loan interest rates are right now. Again, we were down 44 basis points yesterday. We're up 3 today. I mean, you never want to see back-to-back down days. So I'm happy with a 3. It looks like they put the brakes on. We're down 2 basis points on the 10-year Treasury, which is good as well. We do want to see the 10-year Treasury going down. I like it being close to that 3.5 or below it. Let's take a look at our technicals here. Look, we've fallen through a lot of floors that did not hold for us, and now we're hanging by one arm onto the 50-day moving average with quite a ways to go. If we lose our grip, we may fall all the way down to this Fibonacci level here, which is what? 90, what is that? 99.845, and we're sitting at 100.32. So we're talking about almost 50 basis points we could drop before hitting the next floor of support underneath us. How does that put us on our actual interest rates? Well, I'm going to go ahead and pull up our Brent Bruce Daily, our very well qualified 30-year fixed conventional home loan, 800 FICO score, 25% down, single family residence, primary residence. But while I'm doing that, make sure that you do take a minute to like, subscribe, and share, and hit the notifications bell because we put this report out almost every single business day. I have to say almost after yesterday, almost every single business day. And you want to make sure that you know what's going on and what home loan interest rates are doing and how they're moving, especially if you're in the real estate industry. Well, here we are, 6.625% with $25 credit coming back, basically flat at a 6.625. That's with Flagstar, one of the banks that we contract with. United Wholesale right now, 6.625 is costing $720. They're not at the top of the list right now. Neither is 11. Remember, 11 Mortgage and United Wholesale have been fighting for a while. PRMG's been back in the mix a little bit here, costing $11.59 to get to that 6.625. Now, pretty much we always like to take a look at United Wholesale's 5.999 because that's a good indicator as to where we are. So right now, to get a 5.999 interest rate, it's costing 1.336%. Okay. Now, if you remember, not long ago, it was costing 0.213 or something like that. So that means that we're about 1 full% more expensive. And if you don't know this, the term that you hear is we're 1 point more expensive. 1 point is 1% of the loan amount. So if you have a $200,000 loan and you got to pay 1 point, it's $2,000. So a lot of people don't understand what a point is. So when you're looking at these charts over here, this column is referred to as points. So in this case here, you'd be paying 0.3 points, 0.2 points, 1.19 points. So that is what this column is referring to. This is the interest rate, and this is the cost to get that interest rate. I hope that makes sense. Let me know if you have more questions on that. I mean, I could talk all day long, but people get mad when my videos are getting that long. So make sure again that you like, subscribe, and share. I'll get back to you again tomorrow, and we will start getting ready for our bigger reports coming, which is our personal consumption expenditure report, which is coming on the 28th of this month. And then we're going to see what the Federal Reserve is going to do. And that's really becoming what everyone is keeping their eye on, what the Federal Reserve is going to do with the federal funds rate on May 3rd. Talk to you again tomorrow.